Good evening, TheoTrade. This is Corey Blooming. You're watching the Theo Nightly Video for the 5th of January here in 2021. And we do have a volatile week already in motion, but it could get more volatile. So what we're looking at here is the SPY ETF option chain. And what you're seeing, we can take a look at charts in a minute, but just look at the expected move and the probability. So, and volatility mainly. So what are we looking at here? 21%, 25% in terms of Wednesday's expiration, because the SPY has those Monday, Wednesday, Friday expirations. We're taking a look at the Friday. We'll take a look at the other markets in a minute. But there's a $7.40 expected move, or at least volatile play. And that means option prices go up and down the board. If you want to sell or buy premium, mainly if you want to sell premium, you can actually go out there with the SPY at 371 and trade under 360. And don't do this strategy, but just talking about some premium still lifted and the bids and offers and the pricing still lifted at the delta 0.3 or 0.13. That is a decent chain. That's a decent distance that says this is possible for the market to be either beyond the levels that we are. And the implied volatility, again, up to here, is about $7 up or $7 down. Taking a look at the near term, which is just tomorrow, Wednesday session, you still have premium that can be sold. Don't do it, but still premium that is playing into these far away strikes. Do you think the market can go to 358 in tomorrow's session? Where's 358? It's down here. Actually, it's even off the chart. There's 358. But option premium says you can still sell it to get that play. Or do you think the SPY can go all the way to 378? Again, you can sell it. Don't do that strategy. Too short term and too much gamma risk. But that's just the point that shows volatility is in motion for this week. And we can talk about the catalyst that we'd have the Georgia Senate race that could decide the balance of power in the U.S. Senate. I don't think we'll know the results until maybe Wednesday, Thursday, but could know them tonight. And that's a volatile event that could go either way. And we have the certification of the presidential election votes, whatever the volatile session of news events would take place on Wednesday. Just know, getting outside of political discussion, there's volatility happening this week, and the markets are telling us that. So back to the S&P. We had this move, and by the way, back to the SPY. Monday gave, and then one reason the volatility is expanded in the option market is at least we had the move from 375 to 365. That's roughly 10 SPY dollars. And the ES futures, that's over 100. So that move played. Markets can move. Option premium exists. We think it's easy to sell a very distant premium of a delta that can't be possibly hit. But in volatile markets, it can. And that's why that option's priced like it is. It's not free money. If you do decide to sell distant option premium with 1, 2, 3, 4 days to go, that option premium means it can be hit and the markets can get volatile. And that's what it's telling us. And back in this trade tab, we'll look again, start with the S&P futures. And the SPY is your ETF. We won't go through them all, but I'd recommend taking at least a look at how the option chain plays. And on Wednesday sessions, $43 up and down for the S&P futures. And by Friday, there's your similar type of move. It's 73 points in the ES and roughly $7.30 in the SPY. So the NASDAQ plays up to by Friday. We don't have those weekly expirations in the NASDAQ futures. But by Friday, this is basically telling us that the NASDAQ, which trades currently at about 12.8, just shy of 13,000, you could see the NASDAQ up or down 300 points. And that would be similar in the Qs or the DIA, the diamonds, which is a Dow futures or Dow ETF. It goes with the YM, the Dow mini futures, and of course the Russell, which is the IWM ETF. So these are plays to look at those. As we go through the Russell by Friday, you see premium goes out. It has a $55 move. And finally, sticking with the theme of volatility expansion, and the tradable IWM, that goes out to premium 188 and beyond, 206. And that has a $5.60 move expected before Friday. And again, a catalyst political. I'll just sidestep the political commentary to talk about political headlines. Various political headlines will be hitting the tape, economic reports, and in some cases, earnings will be played into. Not a whole lot of stocks, actually. Walgreens Boots, not a lot of earnings. That comes up a little bit later. But this week has already shown volatility. And the Russell, that's two big down days, one before the holiday, before the new year, and the other just after. In the S&P, that was mainly in the Monday session. Same in the NASDAQ, and same in the Dow. So remember, what goes up must come down. And the market does take an escalator or stair step to the upside and an elevator to the downside. And that might not be all that the market gives. Just know this week is going to be, or at least by the option market and political events, a little more volatile than a normal trading week. And that makes sense. People are back from the holidays, putting money to work, re-hedging or reorienting positions, taking new profits off the table to start the new year, or just any number of reasons why they're engaging the market. And they might not have done so the last 2 to 3 weeks because of the holidays. So outside of the equity markets, we can take a look at crude oil. And the main stocks of today's session were in the oil or energy sector. And right here we see that XLE, which is energy, and the ETF was up about 4.5%. It did back off, but that was quite high. Trend day to the upside, playing off of the support levels. And that translates into crude oil doing a similar type of bullish session. And the uptrend continues. Remember, crude oil is an economically sensitive commodity. It tends to trade a little bit like the stock market, but crude is not at all-time highs, not even near them, but the S&P is. So it does tend to mirror or track or trade similarly to the S&P. There's that coronavirus crash. It actually happened before with crude. And the bottom peak reversal, or the bottom reversal, V-spike reversal, took place actually in April as opposed to March. Nevertheless, crude has been in an uptrend, so has equity markets. And we are at new highs as we start 2021. Inflation is back on the play, and that is with the dollar depreciating. We'll start with this first. Dollar going down. We're going to start 2021 with the US dollar effectively at new 52-week lows. We're going to start the year with gold, not at the highs, but rapidly increasing with inflation back in focus as gold trades nearer to this 1900, 2000, and maybe even higher. And the bond market will start at not at 52-week lows, but at the bottom of a downtrending move. And for TLT, that's about 172 down to 155 for the bonds themselves. You can see how that played into this structure. TLT represents closely to ZN, which is your 10-year Treasury note. And these are tradable, but they haven't done a whole lot of movement. So that's a broad play. Stocks in the motion today, or stocks in the move today, included, again, energy names. That includes ExxonMobil and Schlumberger, ConocoPhillips, and Chevron Texaco, and the S&P 100. So these are names that are in play and focus. A quick note, I'll do our scan in terms of the S&P stocks making the highs, and familiar names make the list. This is stocks in the S&P 500 making new 52-week highs. They include Johnson & Johnson, financial companies Morgan Stanley, Goldman Sachs, Target, which is a retail name, DuPont, John Deere, Freeport-McMoRan, copper play, continues to make the, and that was at 4.5% today, and others in the list. And that's mainly what we're looking at to start this new year. We keep this creep going. There will be days when the market falls. This week could be one of them. Volatility is telling us to be careful and to be cautious with our positions. And we could easily see the market move to those levels within our expected move grids. Again, take a look at that. We are seeing the market move up, at least the S&P futures and others, from the weekly expected move. This is our auto-generated move level, and that's about 3665, and that's been a theme for this play. Volatility is expanding, the range is expanding, and we should be careful and protective, defensive, given this ongoing creep and the possibility for higher volatile future markets. This week could be it. Be careful, be safe. This is Corey Rosenblum with tonight's Theo video update for January 5th, 2021.